Hello, dear participants. I hope all of you would be fine and enjoying good health. I welcome you all in the third day of Practice to Pass session, September 2020. Yesterday we discussed uh, audit risk, business risk, procedures, evidence, how to convert procedures into evidence, and the most important type of question, that is matters to be considered. I hope you would have attempted the four questions that we discussed yesterday at home. Ted, Parker, Setter at home. So today we are going to discuss ISAs and audit report as well. So these are very two crucial areas of AAA. Normally students struggle in memorizing ISAs and they are not clear that which area to memorize and which is the area of ISAs which they have to just read out or they have to take concept of that area. Also, students are not clear about the application of these ISAs in case study scenario sometimes. So question number 2 and question number 3 may be assessed from this course of syllabus. So this is important. Sometimes 25 marks or sometimes it can has 15 marks or 12 marks. So, and yes, audit report is also very important. Approximately audit report is regularly tested by the examiner. So he's very keen to know your knowledge and your application and your conceptual framework regarding the audit report. So we are going to discuss all these matters today. I hope you are ready for these. So to start with, these are some slides which will help you to revise different ISAs. So ISA 580 written representation is very important ISA. Sometimes students have to show procedures and evidences. They are asked by the examiner to suggest some procedures and evidences. So there are some areas where students must write written representation as an evidence. Written representation is taken as an evidence where there is a judgment involved or where there is a subjectivism, and according to different ISAs, written representation is compulsory. For example, in going concern case or in case of we are taking procedures or evidence in regards of substantive procedures, subsequent events, for example, fraud, laws and regulations. So if you are asked to write evidence for laws and regulations, related party transactions, uh, laws and regulations, going concern, subsequent events. So you must include written representation among the evidences that you are going to write. So you should be aware that written representation alone is not sufficient and appropriate evidence. So along with written representation, auditor uh, needs to obtain some other evidences as well. They have to review some documents, they have to see correspondences as well, and they have to make inquiries with the management regarding the issue. So these are important and you must memorize these things. So these are some of the list of the ISAs under which written representation is specially included in case of evidence, related parties, subsequent events, going concern, fraud, laws and regulations. So this is very important. Now ISA 620, using the work of auditors expert. Sometimes auditors need to use expert in certain areas where there is a specialist approach needed or there is expertise that is not obtained by the auditor. So auditor is not expert in that area or in that industry. So auditor has to hire an expert or sometimes management hires an expert. So yes, auditor can rely on the expert, but he needs to check the competency, capability, and objectivity. So you should know that what are the key factors to check the competency, capability, and objectivity as well. And yes, how to evaluate the work of the expert. So the reasonableness of the finding, the relevance and the reasonableness of the significant assumptions that have been used, the relevance and the completeness and the accuracy of the source data they are using. So expert should use updated data upon which he is going to calculate, or he is going to apply statistical tools to come to a conclusion. So you should be aware of these. Yes, internal auditors, external auditor also relies on internal auditors to some extent on all clients. And they can rely up to the extent of test of control. So how they are going to rely on internal auditor? It is a matter of evaluation of internal audit function and the organizational status. So you must see the work that is performed by the internal auditor, that is properly planned, performed, supervised, or documented, and sufficient appropriate evidence is taken, and all these things. So you should memorize these 4 points. Then there is ISA 550 related party transactions. So you know related party transactions are tricky ones. There are some special relationship under which there is no arm length transaction. So they needs to be find out, and they should be according to IS 24. There should be a disclosure requirement. So there are some general audit procedures. These are some general audit procedures. Whenever you are asked to write evidences or procedures for related party transactions, yes, you can use these general audit procedures, but you should link them with the data of the question that is provided by the examiner. So you can see inspecting shareholder record for detail, inspecting minutes of the shareholders meetings, inquiring of other auditors involved with the audit, confirm transaction with bank, law firm or other intermediaries. So these are general procedures. You just can read out them and you can have a general concept of them. So whenever a question comes from that area, so you can use your knowledge and you can use the data. Yesterday we discussed how to basically write procedures and evidences, and I shared with you a procedure map. In that procedure map we discussed there are 3 elements that are important and that should be keep in mind to evaluate and write good audit procedures. So these 3 elements are basically the data, the process, and the assertions with accounting standard. So that data is important, assertion, and all these things are important. So you should focus on the data. What is the story of the data? And you should use that story. But these are some general procedures you should be aware of. Then there is ISA 540 estimates and fair value. Sometimes there is a head which has a lot of estimation, or there is a fair value involved, for example, revaluation, for example, depreciation, scrap value, for example, inventory, NRV. IFRS 9 also says about the fair value model. So if you are going to check and audit, or you are going to obtain the evidences related to fair values and estimates, ISA 540 is relevant. So these are some general procedures that you can use during the exam conditions. But once again, I would focus on that thing that these are general procedures. You can go through them, you can read them, you can have concept of them, but whenever you are going to apply them in the exam conditions, you must link these procedures or evidences with the data provided by the examiner. So that is important. ISA 510 is also important. This is the auditing standard that is applied whenever auditor is engaged in a new audit, initial engagement. So it relates uh, to the possibility of misstatement in opening balances. So yes, this is the most important requirement. Auditor must obtain sufficient appropriate evidence that opening balances do not contain material misstatements and appropriate accounting policies have been consistently applied or changes adequately stated. So whenever auditor is engaged in a new audit, so this doesn't mean that auditor just only have to focus or concentrate on current year's closing balances. No, current year's closing balances also include the opening balances that were the closing balances of the previous years. So we have to confirm that opening balances are not misstated. If opening balances are misstated, so and they are material for this year as well, so we have to modify our audit report. So these are the normal audit procedures to fulfill our above mentioned responsibility. So this is our responsibility, and these are the normal procedures that are applied by the auditor. So yes, he has to see the prior period closing balances. He has to read the audit report of previous auditor. He can see working paper. In case if he has found any material misstatement, he can obtain evidence related to that transaction as well. Then there is ISA 560 subsequent events. This is one of the most important ISAs. Subsequent events related to IS 10. So auditor should obtain appropriate evidence that whether the subsequent events are properly accounted for according to IS 10 or not. So this is his primary responsibility. So according to ISA 560, auditor has two duties, active duty and passive duty. So you should be aware of the difference between them. So active duty, auditor has active duty until the audit report is signed, and after that, auditor has passive duty. So in active duty, he'll obtain sufficient appropriate evidence to confirm that every transaction in a subsequent period is properly recorded according to IS 10. But in passive duty, auditor will not by himself go for the evidence. But if he receives any information, then he will do what is necessary to clear the point. So these are some general procedures. Yes, these are general procedures. You can read them, but actually the marking scheme shows the relevance of the procedures with related to data. So you should link these procedures with the data. You don't need to memorize these procedures. You just need to read these so that you can know the areas in which you have to think about whenever examiner asks a question in subsequent events. ISA 570 going concern is also one of the favorite auditing standards of the examiner, and we will see a question on it. And auditor must obtain sufficient appropriate evidence that the management's use of going concern basis is correct. So he needs to confirm there is no material uncertainty, and he needs to see what impact it has on the audit report. So these are once again simple general procedures that can be used, and yes, you should not memorize them, but you should read them to understand the areas in which you are going to juggle around, and you need to understand them so that you can apply them in case study provided in the exam. ISA 450 is important in terms that whenever you have obtained sufficient and appropriate evidence related to a material misstatement, so what auditor needs to do when he finds out a possible material misstatement or a confirmed material misstatement. So normally if examiner asks you to write further actions that are needed, so it includes ISA 450, the evaluation of the misstatements identified during the audit. So normally students do not read this auditing standard, and they are unaware of the requirements of the auditor. If he has found any material misstatement, so he should not just go and modify the audit report. He has to follow some steps. He has to follow some stages. So first of all, he has to aggregate them. He has to see the management integrity. He has to see whether he has to change his audit sampling or not, whether he has to check some more vouchers from that list of transactions or not. So then he will communicate with the management. He will ask them to adjust them. But if they do not adjust, yes, auditor will see the reasons why management is not interested in adjusting that point. So he will ask them to give written representation that these misstatements are immaterial, and he will also judge the management integrity as well. So then he will go for the disclosure or presentation to the persons charged with governance, and still if they are not interested in making adjustment, then auditor will change or modify the audit report. So these are the steps that needs to be followed if auditor has found any misstatement. So these are important. This is the way you are going to evaluate the uncorrected misstatements. So ISA 250, consideration of laws and regulation. This is also a very important ISA, which is often tested in exam condition. and you should be aware of the auditor's responsibility. Yes, primary responsibility of obeying laws and regulations stays with the management. They have to make control system and they have to make sure that all laws, all relevant laws and regulations are complied with. But as far as the auditor's responsibility is concerned, auditor must obtain sufficient and appropriate evidence that all direct laws or indirect laws are complied with and financial statements are prepared according to these laws and regulations. So there are two types of laws and regulations: direct laws, which shows the assertions of the financial statements, which shows how the assets will be stated, how they will be calculated, how the valuations of the assets will be done. And there are some indirect laws, for example, Employment Law, Data Protection Act, for example, environmental laws, anti-monopoly laws. So these doesn't have a direct impact on the preparation of financial statement. They have the impact to the extent of the provisions in case of any non-compliance, and the going concern effect. If we are violating a law, there may be a chance of bad reputation and even a closure of the business. So in this case, our going concern assumption may be biased. So for this reason, we need to consider the indirect laws as well. So these are some initial audit procedures. You students need to understand the level at which these procedures must be applied. So these audit procedures to identify instances of non-compliance are basically at planning stage. So you have to obtain general understanding. You should inquire with management and inspecting correspondence and remaining alert. Yes, you should remain alert when you are executing the audit. You should obtain written representation from the director concerning that there was no non-compliance during the year. So these are the procedures that are performed at planning stage when you have not found any non-compliance. So sometimes examiner asks you that, or the data is compiled in such a way that you have found a non-compliance. So you are asked to state the further actions that are required by the auditor. So in this case, these procedures are useless. So if the auditor has found a non-compliance, so you have to apply these procedures, audit procedures, when non-compliance is identified. You should inquire with the management of the related penalties to be imposed. Correspondence of the regulatory authority is very important. Then board minutes are very important, that what is the decision that is going to be taken by the management in this regard, and the inquiry of company's legal department is important. So these are the procedures that you are going to apply when a non-compliance is identified. But when you have identified the non-compliance and you have performed these procedure and management is not interested in making adjustment, so then you should follow these points: communicating and reporting non-compliance. So you should be aware of these steps, that what should auditor do if a non-compliance is identified and management is not going to basically adjust that. So you need to see the management integrity. You should ask management to adjust that, and if they are not interested, then you should go towards person charged with governance and all this. And in extreme case, you can disclose this information to third party and it will not be considered as the breach of confidentiality, because it is the requirement of laws and regulation. So, and yes, in case of a major breach of laws and regulation, even you can withdraw from the audit assignment if the local legislation allows you. Means after taking legal advice, even you can withdraw from the assignment. So these are the aspects of different aspects of ISA 250, but you need to understand at which level these different procedures will be applied. The above mentioned procedures are used when we are at planning stage of the audit. So if generally, if examiner asks you to generally state the procedures that will be applied at planning stage, so you should use these procedures. But if you have identified the non-compliance according to the data, then you should use these procedures and you should follow the communication and reporting process stated here. So these are some facts that needs to be memorized. If you have not memorized these steps, so when you are going to write the answer in exam condition and under pressure conditions, so you will write by yourself, which will not be as accurate as if you have memorized them. ISA 240 is also one of the favorite area of the examiner. Auditor's responsibility related to the fraud. So primary responsibility of protection of the fraud or the detection of fraud stays with the management, but auditor is not free from the responsibility. Auditor is partially responsible, and he needs to reasonably assure that financial statements are free from material misstatement caused by fraud or error. So this is the requirement of ISA 240 and ISA 200 objective of audit as well. So yes, auditor needs to increase his skepticism and he needs to remain alert if there is a possibility. So these are some procedures, some general procedures, but once again, be aware that these procedures are at planning stage. So at planning stage, you should look for the indicators of the fraud. You should apply risk assessment procedures. You should discuss within team the possibility of fraud. You should apply analytical procedures, and you should obtain written representation. So these are the possible procedures that should be applied at planning stage. So during audit, what you do, you should review journal entries, because journal entries are more prone to fraud risk, especially at year end. Review management estimates. Estimates are always tricky and they can be subject to biasness, and management can easily overstate or understate estimates because they are subjective. The transactions that are outside the normal course of business, or the transactions that are unusual, are deemed to be considered special focus, or they need special focus if auditor is engaged in that audit. And yes, auditor needs to obtain written representation that management is not aware of any fraud that occurred during the year. So then comes the audit report. Previous slides included some important ISAs that you should memorize them. You should be aware of the basic points, the basic auditor's responsibility, and you should read some general concepts. You should read the general procedures so that you can apply them according to the data that is provided. So then we have some slides related to audit report, the modification of the audit report, different paragraphs that are included, emphasis of matter paragraph, other matter paragraph, uh, we can say material uncertainty paragraph, and other information paragraph. Audit report can be modified on the basis of the materiality level or pervasive nature, and the audit report is modified according to ISA 705, and the paragraphs that are included are according to ISA 706. The unmodified report is prepared according to ISA 700 revised, and CAM is included according to ISA 701. So if you are aware of these ISA numbers, and if you can use them under exam conditions, and if you can write the responsibility and the liability of auditor under exam condition, then you can earn good marks. So it will give a good impression on examiner that that emphasis of matter paragraph is included according to ISA 706. So you need to understand that there are three types of audit reports. Unmodified report, where financial statement gives true and fair view and there is no material misstatement found. Then there is an unmodified opinion with modified report. Here auditor is also providing the opinion that financial statement gives true and fair view, but he is going to focus on some paragraphs after opinion. So these are four paragraphs: emphasis of matter paragraph according to ISS 706, material uncertainty, other matter paragraph, and other information. All these areas are not the material misstatements. These are just emphasis paragraphs. Auditor need to emphasize on something, and he want to include it in their audit report as well, so that shareholder may know, or auditor may claim that we discussed that thing in audit report in advance, so you should have read that audit report. So to fulfill his responsibility, he basically writes some paragraphs that have some important information, but material misstatements are not reported here. These are just the paragraphs that are important for, or they are fundamental for the users of the audit report, who can be regarded as the shareholders or some other stakeholders. So what is emphasis of matter paragraph? What are the components? Or emphasis of matter paragraph contains these things, can contain these things. For example, financial statement, if financial statements are prepared on breakup basis, financial statements are prepared according to IS1, there was no going concern, and financial statements are prepared on breakup basis, that is properly disclosed by the management in financial statements, but still auditor needs to justify and needs to disclose in its audit report as well. So he can report it in emphasis of matter paragraph. Uncertainty regarding any case, early adoption of any IFRS, for example IFRS 16, or restatement of correspondence figure IS 8, or any event that is significant impact, can have significant impact on financial position subsequently according to IS 10. So all these are the requirements of accounting standards, you can see, and any requirement of accounting standard which is properly fulfilled by the management, but auditor needs to make emphasis on that point. So this matter can be included in emphasis of matter paragraph, but you should confirm that, and you should be clear upon that thing, that these points will not have a material misstatement. If they have a material misstatement, then we will go for modified opinion. So other matter paragraph, in case of other matter paragraph, if previous auditor was different, or previous year's financial statements were not audited, or why we didn't resign, so these are the reasons of auditor. These are the points that auditor want to mention for the better understanding of the audit report, or to understand the process of auditor. So these are the points. So modified opinion, there are three types of modified opinions: qualified, adverse, and disclaimer. So qualified opinion is formed by the auditor when there is a material misstatement. And yes, there can be a case that auditor was able to obtain sufficient appropriate evidence, or either he can obtain it, or he is not able to obtain the sufficient appropriate evidence. Still, in that case, he can form qualified opinion. So adverse opinion is the case in which there is a pervasive misstatement. And what is pervasive misstatement? According to ISS 705, you should memorize the definition of a pervasive misstatement. This definition can be used in exam at many places. So this is important. You should use the words, exactly words that are provided in the standard. So what is pervasive misstatement? Pervasive misstatement is a misstatement that is not confined to a financial statement assertion, or a transaction. Means it has effect on whole financial statements, or otherwise, if they are confined to a transaction or assertion of a financial statement, but they have substantial effect on the profits or the assets of the company. So these types of the misstatements can be classified as pervasive misstatements, and if there is a pervasive misstatement, auditor will form adverse opinion. So, and in case of disclaimer opinion, this is the point at which auditor was not able to obtain sufficient and appropriate evidence, and it was a pervasive nature misstatement. So we will say that we are not able to draw any conclusion on financial statements. So these were some slides that I wanted to share with you guys, so that you can revise them, and you should learn them and memorize these important points. Yes, you should read the book, you should underline the important areas, and you should make your own notes so that you can memorize them easily. So let's have a look at the format and different questions that are related to our slides for the today. Yes, there are some questions. So let's see. Until now, we have some questions. So, I have one question. This question is related to code of ethics that we discussed on our first day. No, you have to relate with the objectivity. So code of ethics cumulatively discuss the matter of independence. So if there is no objectivity or integrity, then auditor is not independent. So basically you have to focus on code of ethics. If I only go through these slides, do I additionally need to read the textbook again, or will these slides for today's topic are good enough? I suggest that you should go through the book so that you can have a good understanding, a thorough understanding of the ISA. You should know the details of or the good insights of the ISA. But as far as the memorization is concerned, I have prepared these slides so that you can understand which area you need to memorize. So normally students ask this question frequently, that sir, which area of the ISAs we need to memorize. So I have prepared these slides to take this consideration, and the points that are discussed in slides are enough if you memorize them, but you should go through the book. There is no substitute to book. This is important, and you should be aware of that thing, that there are 20 to 25 marks questions in an exam normally, which are knowledge based, and the answer of them will be specifically and straightforwardly from the book. So if you have read the book, you can easily gain 20 to 22 marks, 23 marks for these types of questions. So group, can you give an example of pervasive misstatements? Yes, Zakrullah Taibi is asking, can you give an example of pervasive misstatement? So we discussed that there are two types of pervasive misstatements. One that is not confined to a transaction of or an assertion of the financial statement. So for means it has effect or impact on whole financial statement. So we can have two examples for this type of misstatement, pervasive misstatement. One is skipping a subsidiary in consolidated financial statements. So if you have missed a subsidiary during the preparation of consolidated financial statement, so all the heads of the financial statements, whether it is income statement or balance sheets, will be incorrect because you have missed a subsidiary out of all. So in this case, every head of the financial statement will be misstated. So this is a pure example of a pervasive misstatement. And if financial statements are prepared on going concern basis, and in actual the financial statements or the assumption is not valid, and financial statements should have been prepared on the breakup basis. So in this case, uh, all of the heads of the financial statements are misstated. So this is also a good example of pervasive misstatement. Now if we come to the second point, the pervasive misstatement can also be a misstatement that is confined to a transaction or assertion, but still it has a substantial effect on the assets and the profits. So for example, if management has not recorded a provision of 50 million and company has reported 40 million profits, so if company is going to adjust that provision, or if they are going to record that liability, that provision of the case, so the profit of 40 million will be converted to the loss of 10 million because provision value is 50 million. So this is a substantial effect. Profits are reduced by 120%. So if profits and assets are reduced by 80%, 90%, or in case of asset, if assets are reduced by 70 or 80% due to one adjustment that is required, so this adjustment is not actually considering, or that the impact of that one adjustment is not on whole of the financial statement, but it is actually manipulating the main area, that is asset. So as it has a substantial effect on assets, so we can consider this misstatement as a pervasive misstatement. So I hope it will be clear. Pervasive, please explain pervasive misstatement. So many students have asked this question, please explain pervasive misstatement. I am hopeful that you would have understood by now. So whole financial statement, do you mean SFP and PLOCI? Yes, financial statements, whole financial statements means minimum balance sheet and income statement. And cash flow is not necessary, but balance sheet and income statement at max. So can I say that in every case my objectivity would be impaired in every case? No, objectivity is not impaired at every case, Fahad. When you are in breach of confidentiality, so you don't have your any self-interest threat behind you, or if you are not competent enough, so this is the case of violation of the professional competency, and you have taken or you have accepted an audit engagement for which you are not competent enough, so this is a problem of professional competency. So yes. So Saad asked a question, is it important to refer ISAs in the answer? uh, I recommend that you should use ISAs and you should refer ISAs, at least the numbers of the ISAs. For example, for going concern, you should refer ISA 570, and you should state the auditor's responsibility according to that ISA, and you should memorize exact responsibility. So you should memorize these 2 to 3 lines exactly from the book or from the slides. So this is important so that you can discuss the implications of that responsibility afterwards. Can we calculate the ratios on our calculator? Yes, you can calculate the ratios on your calculator. Calculator is allowed. And can we write short form in exams like FS and PBT and SFP? If you have written the word profit before tax complete for once, then after that you can write PBT, but you shouldn't use these words from start. What if auditor does not obtain sufficient appropriate evidence? Will opinion be modified or disclaimed? So we need to see the area in which Husnain, the area in which auditor has not been able to obtain sufficient and appropriate evidence. So if the area is related to a possible material misstatement, then we will qualify our audit report. And if the area is related to the pervasive misstatement, then we will go for the disclaimer opinion. For example, if the provision uh, that is not recorded is above the materiality benchmark, but it doesn't have a substantial effect, and we are not provided the correspondence of the lawyer, so or we are not given or provided the written representation, so in this case we are not able to obtain sufficient or appropriate evidence, and as it is a material misstatement, we will go for the qualified opinion. But for example, in the case of subsidiary, the documentation is not provided, the data of subsidiary is not provided, or the going concern assumption report is not prepared for the next 12 months, or it is not provided to the auditor. So as you know, going concern is a pervasive issue, and auditor is not able to obtain sufficient and appropriate evidence. In this case, it will be considered a disclaimer opinion. So Saida Mehak is asking, sir, please discuss the core reasons of failing at 45, 46, and how can we overcome them? Yes, in AAA, this is a normal activity that if a student gets fail for the first time, so he starts failing that paper again and again and again. So he thinks that I have understood and I have the understanding of, and we have clearly memorized all the answers of the kit and the past papers. So this is not just enough. So there are some reasons. Time management is one of the most important reason. Normally students who are failing at 45 and 46 are not practicing enough. They are just reading the papers and the questions, past papers, and they just go through the answer very early, at very early stage, so they are not able to identify main points when they are working for the paper. And yes, one of the main reason of getting fail is that normally students focus on the core requirement. For example, in yesterday's questions, we saw part B where audit risk was required. So, and in part A, the planning stage factors were required, and at part C, the suggested principal audit procedures were required. So normally students focus on part B, which contains 17 marks, and he doesn't focus on part A and part B. So part A and part B cumulatively or aggregately makes 13 marks. So 13 marks are very much close to 17 marks, and they are easy. And if student concentrate on A and C part at practice stage as well and at exam center as well, so then he can earn more points. And the fifth or fourth point of failing at 45 and 46 is that he has not memorized main responsibilities of auditor in context to ISS. He's not aware of the main responsibilities. Yes, he know there is an ISA 570, and it says something about the responsible auditor's responsibility related to subsequent events, but he cannot memorize it exactly. So he doesn't have a good concept related to that is required to pass the paper. And the fifth thing that is very important, if student is failing again at 45 and 46, is that he's not gone through mocks. He has not practiced enough. So there are many reasons that student gets fail normally. Yes, I'll try to draft some answers, Fahad, but I hope that you are senior enough to understand the points and the main theme. I don't want to engage myself in drafting all the answer. I want to go through maximum questions through this 3 hour session, and I want to give you insight of the different marking schemes and different areas. So I hope that if I do not engage myself in drafting an answer of a question, so you should understand that I'm going to focus on some other extra things, and I want you to. Yesterday, I drafted 3 audit risk, and I also drafted two uh, two types of procedures. One for short-term investment, speculative investment, and the other one was for I think R&D. So I drafted them. So I'm not interested in drafting all the requirements of all the questions. So because 3 hours session is short, and we cannot do or draft all the answers. So yes, you need to understand. Can we copy questions to response space and then not delete it later? Pavitra Ramesh, you can copy the question, but why will you not want to delete it later? If you have copy pasted the question from exhibit to your answer sheet, so uh, if you want to copy a line from there, yes, you can, and you can write answer after that. So it is an easy way to write. Yes. How to overcome the time management problem? Raja Wakar Hussain. Time management problem is very sorry, very crucial in AAA. Very rarely student is able to complete 100% paper in given time. So the only way to compete in time management is to write the past papers more and more, practice more and more. So normally students want shortcuts. They want to just read few pages from the book, and they need that. They think that if we go through 10 to 15 questions from the exam kit, so it will be enough. So shortcut cannot earn you the required time that should be managed. So if you want to manage the time, you have to go through the exam kit for 2 times. I think you have to cover 70 questions, not for just once. You should attempt them twice so that you can have a good understanding of every area. So if you do that, whenever you start reading a question in exam, you will have a map of a similar question that you attempted in the kit. So you can revise the answers that you attempted in that question. So on the basis of that format, you can just quickly start writing, and you can use approximately same calculations. So if you have a good grip. Yes, another reason of failing AAA is not having good understanding of SBR or accounting standards. So normally students know only 2 3 line requirements of an accounting standard, so they don't have in-depth knowledge of the accounting standards, so that is why they tend to fail. So I think that's enough for the discussion. Now we should move towards the questions. Time constraints. Pavitra, time constraint is very important. You need to manage your time from your practice. From your practice. So whenever you are practicing a question at home, you should calculate the time allotted to each part before you start that question. So you should allot, for example, say there are 6 marks for part A. So you should calculate, now we have 11 minutes to go through or right answer for part A, and for part B that is of 20 marks I have 32 minutes, for example, and the part C which is of 10 marks I have 18 minutes. So you should use time management tools when you are practicing at your home. And if you are not practicing this thing, time management technique at home, you cannot apply that technique in exam conditions. So because you are not able to give more power or exert more knowledge which you are applying at practice stage. So in exam you are 80% of what you have achieved in the practice sessions. So this is important. So let's switch back to the questions that are for tomorrow or for today. You can see. So let's start from Kandinsky. This is very important question. This is a question that is basically related to going concern issue. This type of question has been assessed 2 to 3 times within 2 years by the examiner. So this is a complete question that gives you insight how examiner is going to ask the requirements, what is the type of data that is provided by the examiner. You can see there is a mixture of financial and non-financial data, and normally this type of questions falls in question number 2 or question number 3. So the requirement is identify and explain the matters which may cast significant doubt on the company's ability to continue as the going concern. So you have to identify the factors, but you doesn't need to just identify the factors, you have to explain them. You have to explain that why it will have a bad impact on the ability of company to continue as going concern, or why it will have a cash flow problem. So this is important, and recommend the audit procedures to be performed in relation to the going concern matters identified. You can see 6 marks are allotted for part 2. So this means you should try to write 12 procedures in context to requirement 2. As discussed yesterday, I hope you would have understood the reason why I'm asking you to write double procedures as compared to marks. So you can see Kandinsky is one of the client, and it is involved in luxury food items, chocolates and other confectionery, so which are sold as a gift items. So these are some expensive items that they are making. Now this is an important information provided here by the examiner. Due to an economic recession of the products have fallen sharply this year, and measures have been implemented to support the company's cash flow. So you are aware that company only has 150,000 pounds, sorry, dollars in cash at the year end. So this is very important information. You should highlight the important information when you are going through exam, so that you can come back and you can easily trace them. And this is some financial data: revenue, operating expenses, finance charges, then these are the liabilities and everything. So the first thing that you should do, you should calculate the percentage increase and decrease in each head. So you should calculate the percentage increase and decrease in revenue, in operating expenses, and in finance charge. And there is no operating profit given here. So if you exclude finance charge figure and you recalculate the operating profit, and if you can calculate operating profit and divide it by the revenue, so you can get the operating profit margin. So these are the percentage change. Last year the borrowings were, long-term borrowings were 3,000. This year they are 3,500. Last year they were 650. This year they are 900. So there are notes attached to them. So you need to understand everything is going worse in that company. There is a contingent liability, there is an undrawn borrowing facility that is reduced this year. The short term and long term borrowings are at increasing trend, and companies at loss this year. So this is important. This is the information you should use when you are formulating or developing your answer. So these are the notes: note number 1, note number 2, note number 3, and note number 4. So these are important. So you can see the bank loan was extended in March 2015 by drawing on the borrowing facility offered by the bank. So the loan carries a fixed interest rate and is secured on the company's property, including the head office and the manufacturing site. The first repayment of loan capital is due on 30th June 2016, when $350,000 is due to be paid. So how you are going to write the point? So first of all, you need to go back to financial information and you need to see the change in the long-term liabilities. So we discussed note number 1 related to long-term liabilities. We can see there is an increase of 500,000 this year in long-term liabilities. So what is the percentage of increase? If I calculate that, so it's a 16% increase for this year. So how we are going to tackle this question? Let's see. So first of all, you need to understand that there will be a data that is provided in the question. So there are two types of data. One is financial data and the other is non-financial data. When you have written data from the question, then there is a logic that should be used, and that logic will be linked with the requirement. So you know what is the requirement. You have to identify and explain the factors that cast doubt on the assumptions of the going concern of the company. So you have to link everything to the going concern cash flow problem. So this is the main technique that should be used. So if we apply this technique to this data, note number 1. So let's go back. So there are two types of data: financial data and non-financial data. So first of all, we pick financial data. So what is financial data here? 500,000 increase in long-term liability. Okay. So can you calculate any percentage? Yes, you have calculated 16. This is 16% increase as compared to previous year. So these are the two aspects of financial data that we are available with, and there is some non-financial data as well. So let's go towards non-financial data. Non-financial data is written in note number 1. So what are the most important elements in this paragraph? The loan was extended in March 2015 by drawing on borrowing facility offered by the bank. The loan carries a fixed interest rate and is secured on the company's property, including head office and manufacturing site. So this is very important. So I have written here, the loan is secured and it is secured on company's property, especially head office and the manufacturing site in which production area is included. So the area in which company is producing the product, that are the chocolates and different confectionery items, so that area is basically mortgaged to the bank, and if we do not pay back the loan at time, so we cannot use that production area and it will be a disaster for us. So this is the point. This is a non-financial point, and there is another point. The first repayment of loan capital is due on 30 June when 350,000 is going to be paid. So this is another important point, that we have to pay. We have to pay $350,000 on 30th June 2016. So this is the data that is available to us. Now, what is the logic? So logic is, what is logic? Sometimes students use common logic. What is common logic? Means I can say rational approach. That is common, that will happen. Everyone knows that what will happen next. So this is called rational approach. But sometimes accounting standard is the logic and sometimes ISA is the logic. In this question, accounting standard and ISAs are irrelevant because we need to discuss according to the rational approach that how this data is going to cast doubt on the going concern of the company. So this is very simple. You can see company is in financial difficulty, company's revenues are down, company is in loss, and company has only 150,000 left. You can see in the data, company has only 150,000 cash, and this year they were in loss. So if company, this is probable that at 30th June 2016 company will not be able to pay 350,000. So this is logical. Okay, so I can state that as company is short of cash, whenever you are writing the logic, you should also use the data that is provided by the examiner. So as company is short of cash and it only has 150,000 at year end, and company is also in loss of one sorry 180,000. So this is the logic, that company has to pay 350,000 and the property of the company is basically uh, secured with the bank, and if company defaults, means if company is not able to pay the debt at time, so the bank has a right to secure the company's property, which includes head office and the manufacturing site as well. So if this happens, Kandinsky would be left uh, without any operational site or production facility. So it will be very difficult that company will, we can say, survive in coming conditions. So as company doesn't have sufficient cash, So even company will not be able to pay the fixed interest. So these two points compiled with the non-payment problem, because if we do not pay at the time, that is 30th June, so what will happen? Company's site, means manufacturing site, will be closed. So this is our logic. So now finally we have to relate it with the requirement. So under these conditions, if company doesn't pay and don't have space to manufacture, it is difficult that company can survive under these conditions. We have written that as well. So this is a complete point. So you should understand that you should use financial data and non-financial data. Then you should analyze the data, that how it will have an impact, and you should conclude linking with the requirement. Now these are not the headings that you should make in the exam. These are the bullet points that should be in your mind, so that you can, when you are writing a paragraph, so this is one paragraph. This is one paragraph in which you are discussing the long-term borrowing issue. So your paragraph starts with the financial data, and then you discuss the non-financial data, and then you discuss the impact of these two things. If they go wrong, what impact they will have. Company will not be able to produce anything, and yes, company will close its manufacturing site, and company will not be able to survive under these conditions. So this is basically how company's going concerns is at stake here. So this is a complete paragraph. You don't need to apply these headings in exam. These are just bullet points for your ease, so that you can understand how we are going to write the answer. So these bullet points are for your consideration. These should be in your mind so that you can apply them across the question. So this is how you are going to write all your answer. So you should explain 500,000 increase and 16% increase, and the impact of the non-financial data, and how it is going to hurt the company's survival and company's going concern assumption. So this will be discussed in one paragraph, but your paragraph should be structured in such a way that it should always start with the data, with the financial data and the non-financial data, then the logic or rationale behind that, what happens if company cannot pay the loan, and the properties pledged to the bank, so what happens. So this is a rational approach. This is a common sense point, that bank will close the area that is pledged, and he will sell and will be paid by the sale of that head office and the manufacturing side. So company will not be left with any head office or manufacturing side. So ultimately company will close down, and there will be no going concern for the future. So this is how you are going to write every point. So this is very important. So let's take a 10 minutes break here for prayer break, and then we will come back. Okay, Muhammad Ali, is it good enough today for you? I'm hopeful. So see you after 10 minutes. So dear students, welcome back. So before break, we were discussing these things. So the area in which most of the students lack and they can't use the data is basically the financial data. Students do not relate the financial data that is provided in exam. So you need to calculate percentages or increases or decreases in different variables that are provided in the data. So this is very important, and you should use your own logic. It is not enough to just copy paste the data from the exam, from the question, and just add one line from yourself that it will have a major impact on going concern. This is not enough. You have to interpret the data, you have to explain. So the requirement is not just to identify. The requirement is to identify and explain how it will cast doubt. So how means that if company is not able to pay 350,000 because company is in loss nowadays and company doesn't have much cash with them, they only have 150,000. So this means that, and company is in loss also. So there is a probability that company will not be able to pay 350,000 at 30th June 2016. So in this scenario, if company is not able to pay, then as the manufacturing side and the head office is secured by the bank, so it will be very difficult for the company, and there is a possibility that company may default because of the due payment in June 2060. And yes, bank has a right to seize the asset in order to recoup their funds. So if this happens, Kandinsky will not be able to uh, continue their functions and their operations, and ultimately they will not be able to continue as going concern. So these are the points you should discuss. As far as point number 2 is concerned, you can see Kandinsky renegotiated its term of trade with its main supplier of cocoa beans and extended payment terms from 50 days to 80 days in order to improve working capital. So once again, same scenario can be applied. This is the non-financial data that is provided, and there will be some financial data. Yes, note number 2, you can see from 650 to 900. So there is an increase in short-term liabilities, there is trade payables. So you must calculate the increase in the trade payables. You should show this calculation, and then you should come towards the non-financial data. And what are the main important points? First of all, this is the main supplier of cocoa beans. So you know, in chocolate manufacturing, cocoa beans are very important, and one of the main supplier has concerns. So we are renegotiating with them, and we want to extend our payment terms from 50 days to 80 days. So first of all, this clearly shows that we are short of cash flows. We are having cash flow issues. We are not able to pay our supplier, our main supplier, in 50 days, and we are going to pay them in 80 days. So you have to explain the matters which may cause significant doubt. So what happen if supplier decline the extended payment? If he asks that the Kandinsky must pay in 50 days, so this means company even at this time is not able to pay the cash at 50 days. So this will create a problem. The main supplier will not give them any raw material. So if company is not able to purchase raw material from their main supplier, so it will be very difficult to continue as a going concern. And if they say okay, we will receive payment after 80 days and we extend your payment terms. So if we are not able to pay this amount and company is struggling to basically due to managing the product cycle, company is struggling to pay to its main supplier, and if it also struggles to pay after 80 days, so what will happen? Supplier will stop supplying the company, or there will be a case that company can withdraw credit terms and they can ask to pay in cash. So as company don't have the cash, so company will not be able to continue as going concern. And in extreme cases, if company doesn't pay in 80 days, this is all the logics that I am thinking of. So these are the rational approaches, these are the common sense logics that you should think in examination condition. So as I was saying that if we do not pay even in 80 days, so what will happen? Supplier can bring legal action against us. So, if supplier uh, files a case against a company and within the due date, if company is not able to pay, so in this case there can be a risk of compulsory liquidation as well. So company will not be able to continue as a going concern. So this is all the analysis that you should perform under exam conditions. So you should start with the financial data. Normally students doesn't give much consideration to the financial data. They just think that we have non-financial data and we can use this financial data to conclude on the significant doubts on the going concern. So if you want to earn maximum marks, you should use financial data and non-financial data, and you should evaluate what will happen if these things go wrong. So how can it cast doubt on the continuation of the company as a going concern. Same is the case with the borrowing facility are due to reviewed by the bank in April 2016 and contain covenants including that interest cover is maintained at 2 and ratio of bank loan to operating profit does not exceed 4:1. So it is very important that you first calculate the existing interest cover and the operating profit, bank loan to operating profit. So you will see that interest cover is uh, basically below 2, and the operating profit, bank loan to operating profit will exceed from 4:1. So you can state that even if bank as bank has certain covenants that should be maintained by the company, that is Kandinsky. So if a company is not able to maintain these covenants and is in breach of the covenants, so bank has a right to withdraw the facility. So if bank withdraw the facility, so what will happen? Kandinsky will be left to their own cash, and the Kandinsky will be exposed to the cash shortage, and there is a possibility that company even cannot make normal payments to the supplier if the facility of borrowing facility is taken from them. So this is how you are going to analyze the situation, and you have to conclude towards going concern. So financial data is important. You should calculate financial data in the Excel sheet, which is provided in your answer sheet. So there is also a matter of contingent liability relates to a letter of support. So Kandinsky has provided letter of support. Now, if we go back to financial data, $120,000 is stated under the head of contingent liability. So we have 150,000 in cash and we have a contingent liability of 120,000. So this is the sorry, approximately 80% of the cash that we have in hand now. So this is not enough if something goes wrong, if the main supplier of the cane sugar, because he is facing difficult trading conditions, so we are providing them financial support. So we need to understand why Kandinsky gave this financial support to their main supplier, whether it is a strategic decision or they don't have any other supplier. So this needs to be understand what is the strategic reason behind it. Also, if the main supplier goes into the liquidation and there is a legal implication of that on the Kandinsky, and the case is filed on the Kandinsky to pay because they have provided a letter of support. So in this case, company will have to pay 120,000, which company is already in financial difficulty and is not able to pay. So company will not be able to continue as a going concern in future. So all these factors, and yes, along with these non-financial factors, there are some financial analysis also that revenue is at decline. The reason is very much straightforward. You can see economic recession is important, and revenue has fallen dramatically. Operating profits are also tend to be at declining stage. The main reason is the economic recession, and there is also a competitive rivalry. So So this point is also important, that company is at is at loss, and it is not in a position to carry on in going concern if company doesn't convert itself into a profit in coming next year or in coming 2 years. So it is an extremely worrying situation. So if company does not return to profit in the coming financial year, then this would be a major concern for the shareholders and for the directors, and company may not survive as a going concern in future. So these are the important points you should consider. And the requirement two is recommend the audit procedures. So for all these 3 4 points that you have discussed in part one, so you should try to engage yourself and you should write of 2 to 3 possible procedures per factor. So one factor is decline in revenue and operating profits. Second factor is the loan that is to be paid in at 30th June 2016, and the third is the extension of the payment terms with main supplier of coca beans, and the borrowing facility, which includes certain covenants, and fifth thing is contingent liability. So for each head you have to think 2 to 3 items. uh, for example, if we discuss the possibility of contingent liability that may be that company may have to pay, in such case, uh, because we have provided letter of support to our main supplier, so we need to see first of all that letter of support, what legal claim that is written on that letter, and we have to confirm any condition under which Kandinsky would be liable to pay 120,000. We need to discuss with management as well the condition of that thing and how company is going to approach uh, the event if that supplier of sugar cane defaults. Then we should review the minutes of the meetings to see what directors are thinking about it and how are they going to tackle that letter of support that they provided to the main supplier of sugarcane. And yes, the most important thing is the legal correspondence or the legal documentation regarding the involvement of the Kandinsky in the liability of main supplier. So we need to see these things. As far as the covenants attached to these are concerned, that relates to note number 3, which is undrawn borrowing facility. So we need to see the contract and we need to confirm the covenants. And yes, we may need to recalculate the interest cover and the bank loan to operating profit. Yes, we need to review the correspondence from the bank, if any. So through these things, we can see different sorts of the documentations involved. So this is important. And for example, if in point number 2, Kandinsky renegotiated its term to trade with its main suppliers of coca beans, so under this scenario, we also need to calculate the average period for the trade payables, the payable days, or we need to discuss the condition of cash flow at operating cycle. So these can be different possibilities under which you can write the procedures. So headwise, you need to write 2 to 3 procedures for each area, and you can write 12 procedures for 6 marks easily. You can see there are 6 marks allotted to this requirement, so you can write it. So if we go towards the marking scheme, you can see revenue, operating margins and profitability issue up to 2.5 marks per area. It depends on the explanation that students have provided. The discussion of bank loan, trade payables, all these are the regular items, and these are the some procedures that can be, you can see, for 6 marks. You can see there are more than 10 procedures. So you have to consider these things as well. I am hopeful that you would have understood the psyche of the examiner. Normally, examiner asks you to identify the indicators or identify the factors that are relevant to the doubt at the going concern of the company, or they can ask you in part two to suggest some procedures to confirm the going concern of the company. So this is a typical question by the examiner set uh, uh, once a year. So you should be ready for that, and you should practice that question at home. So this was Kandinsky. Now let's switch towards, this was the approach that we discussed for Kandinsky. And now we go back to next question. For example, Spaniel. Spaniel is another important question. Explain the matters that should be considered in determining whether Groom and Co is liable to Spaniel Co in respect of fraud or not. So this is a typical area, the fraud, the prevention and detection of fraud, which is very much favorite area of the examiner. After each attempt, examiner assess this area. So you need to have a good understanding of ISA 240 first. ISA 240, according to ISA 240, you should understand the responsibility of auditor in respect of fraud at planning stage, at execution stage, and at review stage. So according to data, if you read the data, the audit report on the financial statement of Spaniel Co, a long-standing audit client. Yes, this is important. A long-standing audit client. So you can highlight in exam this as well. Was issued in April 20x3 and was unmodified. So we said that financial statement gives true and fair view, and we found no material misstatement. So in May 20x3, Spaniel Co's audit committee contacted the audit engagement partner to discuss a fraud that had been discovered after the audit report, of course. So the company's internal auditors estimate that 4.5 million has been stolen in a payroll fraud, which has been operating since May 20x2. So this point is very important, 4.5 million. So you also need to highlight this, and it is happening since May 20x2. The audit engagement partner commented that neither test of controls nor substantive procedures were conducted on payroll in the audit of the latest financial statement. As in previous year's audit, there were no deficiencies found in controls over payroll. So you need to highlight that there were no test of controls applied and there were no substantive procedures applied. So this is an important point that should be discussed while writing your answer. And the reason behind that was that previous year file actually showed that there were no deficiencies in the control system of the company. So you can see the total assets are of 80 million. So why this figure is given 80 million? So that you can calculate 4.5 million divided by 80 million. So you can calculate the materiality level. Of course, it is material. If we calculate, if we divide 4.5 by 80 million, so we know that 1% of the asset is material. So we can clearly see it is approximately 7% or 8% of the total assets. So Spaniel Co is considering suing Groom and Co for the total amount of cash stolen from the company, claiming that the audit firm was negligent in conducting the audit. So actually, firm that is uh, Groom and Co has a threat from Spaniel Co that they will sue the company for the professional negligence, and this is a matter of uh, detecting the fraud. So how we are going to tackle this? ISA 240 is very important. You have to consider the matters according to ISA 240. So you should need to discuss line by line and paragraph by paragraph. Yes, you should start with the financial implications. First of all, you should discuss whether that matter is material or not. So you should calculate the materiality level. So it will be near 6 to 7% of the assets. So this is a material matter and company needs to consider it. Now you should state ISA 240 requirements that audit should be performed with an attitude of skepticism. So skepticism is very important. A material misstatement occurred due to fraud is very difficult to cover or to detect, because normally the fraud events are basically deliberately hidden by the financial controllers or the persons in charge. So they are due to the, as they are covered by different double entries and accounting principles, so it is difficult to find the areas in which fraud has occurred. So first of all, we have to take the side of the auditor, that they give reasonable assurance, they don't give absolute assurance, and they apply skepticism and they apply audit sampling. So there is always a chance that they may skip the transaction that has an occurrence of fraud. But we need to discuss the matter that is specifically discussed in the data. We need to come back to data and we need to discuss different points. So first of all, a long standing audit client, this is very important. So due to that long standing audit, basically the auditors didn't apply the relevant skepticism, because they lost their skeptical attitude. uh, Due to this, they didn't apply test of controls, and according to ISA 500, they needed to apply test of controls. According to ISA 315, they needed to understand the control system of the company. So you can refer to different ISAs, and this is the logic here. So data is provided that company doesn't applied test of control. So what is the logic? Logic is the ISA. According to ISA 500, according to ISA 315, the auditor needed to understand the control system of the company and to confirm that whether control risk is high or not. So as auditor was negligent in performing relevant ISAs, so yes, company is in negligence to some extent. And yes, auditor doesn't apply substantive audit procedures as well. So at least, according to ISF 520, now we can give the reference of ISF 520. If you have gone through ISF 520 at planning stage, it is compulsory to apply analytical procedures. So if auditor had applied the analytical procedures at planning stage, so he would have known the unusual trend in payrolls. So as you know, if payroll is paid in cash, there is always more risk attached to it. So they didn't give such attention to that point. So they lacked the professional competency and they lacked the professionalism that was required here. So all these points are important and you need to discuss them. So after discussing all these points and all relevant ISAs, you need to basically tackle the duty of negligence or duty of care. So the important question is, the actual conclusion that you should form is, or the main requirement is, whether the groom and co is liable to spinal co or not. So you need to basically discuss the 3 points of the duty of care. So first point is that the auditor owes a duty of care. The second point is that the duty of care has been breached by the auditor. And the last thing is that a financial loss has been occurred by the negligence or due to the negligence. So you need to discuss that. Yes, there was a duty of care that auditor owed because he was hired to perform the audit on behalf of shareholders. So he owns a duty of care towards the shareholders, because the audit report is written to the shareholders. So he owes a duty of care upon him. And about the second point, that was the duty of care has been breached. Yes, he has breached because he was not professional, because he doesn't applied the relevant ISAs. He breached ISA 520, ISA 500, ISA 315. He didn't apply the skepticism appropriately. He didn't discuss the possibility of fraud at planning level. So all these are the important points. So there is a chance that auditor may be found as a negligent one. So this is relevantly an easy question, but if you don't know the relevant ISAs and you don't have grip on ISAs, so you will not be able to earn good marks if you are going to just relate the data So the most important logic here is the ISA. Why auditor needs to apply test of controls, why auditor needs to apply substantive audit procedures, why auditor needs to consider payroll and the happening of fraud or the impact of fraud. So every time whenever we start an audit client, it is important to highlight the risky areas relevant to the fraud. So this is the responsibility of auditor according to ISA 240. So auditor must plan, perform, and review the audit in the light of the risk of fraud. So this is the responsibility that has been violated by the auditor in this scenario. So that is why auditor is considered to be negligent here, most probably. So that is how you are going to basically attempt this question. Lots of ISAs are involved. You should link your answer with the ISAs. So this is very important point. And this question is not as much difficult. This is very much easy question. You should know that if an fraud event has been occurred, and whether it is material or immaterial, you should report it to the management or the person charged with governance as well. So this is auditor's responsibility, and you need to consider them as well. So this is how you are going to tackle this question. This is the marking scheme. Not auditor's primary responsibility. Yes, you can state the actual responsibility stays with the management, but auditor is partially responsible. Payroll has material impact by calculation, of course. Reasons why fraud is hard to detect. Yes, they are covered by different accounting streams and accounting calculations and recordings. And the audit firm may not have been sufficiently skeptical. Why? Because they had a long association with that. And non-adherence to ISAs on control assessment and evidence obtained. This is very important, that I discussed when I was explaining the matter. Discuss whether duty of care owned to client or not. So you should read the book and you should be aware of the duty of care. Sometimes examiner asks you to evaluate whether auditor is negligent or not. So you need to know the 3 points of the duty of care. One of which is auditor owes a duty of care. Second is the duty of care has been breached by the auditor, and the last one is that financial loss occurred due to that breach. So this is how you are going to tackle this question. So you can see there are some ISAs involved, and to earn maximum marks, you need to have a good understanding of ISAs. So that is why these slides of ISAs are included in the handouts. You can download and you can revise from their head. So this is important. No, I don't want to change. Okay. So as far as audit report is concerned, as we discussed, unmodified opinion, unmodified opinion with additional communication means paragraphs, or we can say modified report, which includes material uncertainty, emphasis of matter paragraph, other matter paragraph, and all those. Then there is modified opinion, in which we need to evaluate whether a misstatement is material or pervasive, and whether auditor was able to obtain sufficient and appropriate evidence or not. So this is very important. You should memorize these things. So you should know what are the factors that should be included in emphasis of matter paragraph. You should memorize these points. You should memorize these points as well, which are included in other matter paragraph, and how an audit report can be modified if it has a uh, pervasive effect or a material effect. So this is important. So now we need to consider some two important questions. Normally, examiner assess your audit report understanding by two ways. So there are two types of questions that examiner can ask you to evaluate. First of all, for example, we go towards the Darren question. So this is one of the style of the examiner. Under this style, you can see three scenarios are provided: A, B, and C. So these are three scenarios, and you are asked to discuss the implication of the matters described above in the completion of the audit and on the auditor's report, recommending any further actions which should be taken by the auditor. So this is a typical requirement that examiner is used to. and students must also understand the logic behind that requirement. So actually, you are required to explain three things. First of all, the implication of the matter. Second, impact on the audit report. Third, any further actions. So these are the three sub requirements of this main requirement. So you need to understand when student is not able to manage his time in exam, so what he does normally, he just start writing, he evaluates the matter according to the accounting treatment, and just he goes towards part B and then part C. So he doesn't have left much time to evaluate further actions or the impact of that accounting treatment on it on the audit report. So how we are going to tackle this type of question? So according to the requirement, we will actually, there is no break now. So this question name is Darren. And how you are going to tackle Darren? This is okay. Okay, so there are three requirements. First of all, accounting treatment. Second is the impact on audit report. And the third thing is any further actions. So we should discuss any further actions prior to impact on the audit report. Okay, so this is how you're going to tackle every element. Now, for example, what about accounting treatment? So let's go back to the question. So this is part A, and we will start from part A. We are going to discuss the question for audit report, understanding of audit report. So you can see Darren Co is working on a major contract relating to the construction of a bridge of flyover and Co. So work started in July 20x4 and it is estimated that contract will be completed in September 20x5. And you can see that the year end is 31st January 20x5. So this is the year end and this is the main data that is provided. Profit before tax is 22.5 million. This is provided so that you can calculate the materiality level. Total assets value is also provided, and the company typically works on 3 constructions contracts at a time. So this is important information for you to tackle this question. So let's come back to the data. The contract price is 20 million and it is estimated that a profit of 5 million will be made on the completion of the contract. So it is estimated that company will receive a profit of 5 million when they complete that project of 20 million. The full amount of this profit has been included in the statement of profit or loss for the year ended 31st January 2015. So Darren Co's management believes that this accounting treatment is appropriate. So they have what they have done, they have recorded 5 million profit for this year whereas the project was deemed to be completed in September 20x5, which is basically the next coming year. So they haven't deferred that, and they have recorded full revenue and full profit for this year. So Darren Co's management believes that this accounting treatment is appropriate given that the contract was signed during this financial year and no problems have been arisen in the work carried so far. So as they think that the contract was signed in we can say from February 2014 to 31st January 2015, so they need to book all the revenue for this year. So you should have understood till now that this is a problem of revenue recognition and the profit recognition. So it is mainly the problem of IFRS 15, uh, and IFRS 15 exclusively discusses the matter how revenue, especially in construction, how the revenue should be recorded. So this is the data that is provided. So this project starts from July 20x4, and this project is going to end in September 20x5. Project total value is 20 million and the profit is 5 million. But the important thing is that the full amount of this profit has been included in the statement of profit and loss for this year. So this is the misstatement that they have done. So Darren Co's management believes, yes, they believe they should have any concerns regarding the increase in the revenue or why they are going for window dressing. This is very important. But yes, first of all, we need to discuss the matter, that what is wrong in it, what is the misstatement. Then we need to discuss any further actions according to the requirement that should be taken by the auditor, and then we will discuss the impact of this adjustment. If it is not adjusted into the financial statements, then what is the effect of this misstatement on our audit report. So I hope you would have understood the data. So if we go back to our slide, that how we are going to confirm that. What is the accounting treatment? First of all, you need to discuss IFRS 15. So under accounting treatment head, first of all, you should discuss whether it is a misstatement or not. So the purpose of accounting treatment discussion is basically misstatement or not. So this is our main point, that after evaluating the data, we should conclude that whether it is a misstatement or not. So to confirm that whether it is a misstatement or not, we need to see the accounting standard. What is the requirement of accounting standard and what management has done? What is the recording that management has done and what is the requirement of the accounting standard? So if there is a difference, then that's, yes, it is certainly considered as a misstatement. So according to IFRS 15, you know, uh, the stage of completion is important. If the project is completed, wholly completed in that specific financial year, so we don't need to consider this. But Darren Co, recognized 100% of the contract profit uh, through income statement. So the contract activity, that lasted for 15 months, from July 20x4 to September 20x5. So for this year, from July to January, this year end, our year end is 31st January 20x5. So this project continued this year for 7 months. So according to IFRS 15, only 7 months revenue or profit should be recorded, and the remaining profit should be recorded in the coming year. So this is the matching concept, and this is the requirement of IFRS 15. So you should know that when you have studied IFRS 15, you should know that there are two approaches basically according to IFRS 15 to understand the stages of the completion. So the first approach is basically a cost to cost approach, under which uh, it is based on the cost incurred during the year divided by the estimated total cost. And the second way is the percentage of completion over time. So the time completed divided by total expected time. So we can see that 7 months are completed in actual, and the total expected time is 15 months. So what we need to do, we don't need to actually record 5 million of the profit in financial statement, but we need to just include the profit of 7 divided by 15. That is, for example, if we calculate the percentage, that is 7 divided by 15, it is 47%, for example. So 47% of the project completed this year. So only 47% of the revenue should be recognized this year. But this is not the case in this scenario. Company has recognized 5 million profit. So if we calculate the 46% of 5 million, it is 2.3 million. That is 2.3 million only should have been recognized for this year. But as they have recognized whole 5 million, so it means that profit is overstated by the remaining amount, that is 2.7 million. So you should discuss IFRS 15 stage of completion, and you should calculate the profit, the apportionment of the profit, the figure of profit which should have been recorded according to IFRS 15, whereas what company has done, company has recorded full profit for the year. So it is confirmed that it is a misstatement. So what was the purpose of this accounting treatment discussion? We have to find whether there is a misstatement in it or not. So yes, we are sure that this is a misstatement. So then we will go for any further action. So does we need any further action? Yes, we need further action according to ISA 450, also evaluation of misstatements, and according to the data provided. What should we do? We should discuss with the management regarding completion stage of the project. We should try to convince them. We should also obtain some evidences. For example, for the cost allocation, we can see the survey of work that has been performed till now, the percentage of work that has been completed for this year according to IFRS 15 cost to cost model or cost to cost approach. We need to see the correspondence also, correspondence of that customer. So further actions doesn't mean that you just have to disclose this information to management or the persons charged with governance. Before this, you need to confirm that what is happening and what needs to be adjusted. So it is clear that revenue needs to be adjusted and profit is overstated. So you should complete your working papers. You should obtain the evidences. Yes, you can write some evidences in any further action. So if management denies, if management and persons charged with governance denies to adjust, then we will go for the impact on audit report. So what will be the impact of audit report? You know that uh, this is a misstatement. So if we go back to slides, this we are already in slides. Okay. There were three types of audit report: unmodified report, unmodified opinion with modified report, and sorry, this is wrong. This is not unmodified. This is, sorry, modified. You should change this in your slides. So these are three basic factors: unmodified opinion with modified report, and this is the explanation of the factors. This is modified report. So we have to evaluate which one of the audit report will we issue. We cannot go for unmodified report because we have found a misstatement here. Now this is unmodified opinion with modified report. This is issued when management has prepared financial statements correctly, but we need to emphasize on some matter. So this is also not the case. Whenever there is a misstatement, we will always go toward the modified opinion. So under modified opinion, we have three options: qualified report, adverse report, and disclaimer report. So now we have to judge whether this misstatement needs, due to this misstatement, we are going to issue qualified report or adverse report or disclaimer report. So for this reason, we need to understand whether this misstatement is material or pervasive. So let's go back to data. So the overstatement is not of 5 million, the overstatement is of 2.7 million. As we discussed here, 2.3 million profit is correctly recorded, but the extra 2.7 million that is recorded under profit head is the overstatement. So we must calculate 2.7 million whether it is material or not. So 2.7 million is the adjustment that is required. So we will go back to the question and we will see what is the figure of profit before tax is 22.5 million and total assets are 370 million. So if we calculate them, 0.5, we can say 2.7 million. So we divide 2.7 by 22.5. So we get 0.12. So this means that it is 12% of profit. And what about assets? If we divide 2.7 with 370, so it is 0.7%, 0.7% of assets. So we know that according to materiality benchmark, any misstatement that is above 1% of the assets and is above 5% of the profit is considered as material. So according to profit figure, it is material as it is above 5% benchmark, and according to assets, it is immaterial as it is less than 1%. So we can see it is material according to the profit benchmark, so we can consider it as a material misstatement. And if auditor is provided all the relevant, sufficient and appropriate evidence that he needs to understand that we have discussed in any further action, if they provide us all these things and they don't adjust, they deny adjustment, which is the case, so what we are going to do, we are going to qualify the report, means we are going to use except for. So we are going to give opinion like except for the revenue figure, financial statement gives true and fair view. So our audit report will be qualified because this is a material misstatement. This doesn't have any substantial effect, so this is not pervasive. But this is material according to profit benchmark, so auditor can issue qualified report. So this is how you are going to tackle the question like this. This is Darren question. So the process is very important. First of all, you guys need to understand the accounting treatment. If the student is unaware of the accounting treatment, student doesn't know which accounting standard will be applied, student is not aware of the requirement of IFRS 15 regarding the stage of completion, so he will not be able to calculate the overstatement and understatement, and he will not be able to give explanation of the requirements of the accounting standard. So he cannot get maximum marks. So when you have calculated and when you have discussed all the required treatment according to accounting standards, then you will go for any further actions that are deemed to be necessary. Then you will go for the discussion regarding the impact on the audit report. So this is the format that you should follow. Same is the case with the another thing that should be discussed is that this points, the answer is written in bullets, but you don't need to give answer in exam in bullets. You should include paragraph, you should include a healthy paragraph required or discussing the requirement of the IFRS 15. You should discuss the requirements of IFRS 15, that there is a need to understand the stage of completion. There are two models, and if as we know that cost to cost approach data is not provided in the question, but we are given the total time and the time that has been spent, we can calculate that, so we can apply percentage completion method over time. So when we apply that, 7 months are complete and there are total 15 months, so this means that 47% of the revenue and profit relates to this year, and the extra 53% that has been recorded this year is the overstatement and is regarded as the misstatement. So then you will go further towards any further actions that are required, and then you will discuss the impact on audit report. So this is how you are going to tackle this type of question. So if we move forward towards second part, part B, you can apply same format in part B. A significant contract was completed in September 20x4 for New Buildco. This contract related to the construction of 20-mile highway in a remote area. In November 20x4, several large cracks appeared on the road surface after a period of unusually heavy rain, and the road had to be shut for 10 weeks while repair work has carried out. So New Build Co paid off these repairs but has taken legal actions against Darren Co to recover the cost incurred of $40 million. So up to this, the examiner has discussed the event, what has happened, the road that was constructed by Darren Co. needs repair, and company had to pay 40 million for the repair maintenance, and they have charged Darren Co for the 40 million, that sorry, the new build co, that company should pay for that because this company constructed this road, so they should pay 40 million. So there is a case on the company. So what company has done, company disclosure in this matter been made in the notes to the financial statements. So company has disclosed this matter in financial statements. Audit evidence, including a written statement from Darren Co lawyers, conclude that there is a possibility but not a probability of Darren Co having a settled to amount claimed. So this is what management has done, and this is the evidence that is available. So the issue is, according to IS 37, provisions, contingent liabilities, and contingent assets. So what you have to do, you have to apply this format. If you apply this format in this area, so first of all, we need to discuss the accounting treatment here, that is IS 37. And according to IS 37, you know, the possibility, the point that has been discussed here, that we can see here, audit evidence, including a written statement from Darren Co's lawyer, conclude that there is a possibility but not a probability of Darren Co having to settle the amount claimed. So this means that if the amount is possible, rather than probable, then we need to disclose the matter in financial statements. So this means that due to the due to the treatment, due to the possibility, we will consider it as a contingent liability, and notes to the accounts would be enough, and it should provide the description of the nature of the situation or the estimate of the uh, possible financial effect or any uncertainty related to it. All these things should be disclosed in financial statement. So this is important. This is the requirement of IS 37, that contingent liability should be recorded. So what management have done, management has recorded it as a contingent liability. Oh, contingent liability. So, so we should conclude that there is no misstatement here because management has performed a right double entry. So we can say that there is no misstatement. So if there is no misstatement, we cannot modify our report. But before going towards the audit report, we should consider further actions that needs to be taken in this regard. So we need to, yes, review the legal correspondence, and we need to review in subsequent time. We need to review the facts of the case in subsequent time after year end. Is there any new legal correspondence or anything new that has occurred which can have impact on the financial statements? There is a possibility that when we review in subsequent times, we can conclude that the possibility has been converted to probability. So if a possibility is converted into probability, then we can change our mind, and then we should consider according to IS-37 that it should not be considered as a contingent liability and this should be recorded as a provision. So these are the further actions that should be taken. So regarding the impact on audit report, so as we know, there is no material misstatement. Management has compliance with the accounting standard, that is IS-37. So there is no issue. So we cannot modify our report. So we cannot modify our report. So we have left with two options: unmodified report and unmodified opinion with modified report. So we need to consider whether there is any requirement of ISA 706 or whether there is a requirement of any paragraph that should be included. So yes, if we go into emphasis of matter paragraph, we can see if financial statements are prepared on breakup basis, we can include it in emphasis of matter paragraph. If there is an uncertainty regarding case, this is IS 37. So we can include this item in emphasis of matter paragraph. So if we go back to our slide, what impact on audit report? Unmodified opinion will be issued, but with emphasis of matter paragraph. And you should know that emphasis of matter paragraph is drawn according to ISA 706. So you should explain that uh, that due to the size of the cash outflow, auditor should consider including this event in emphasis of matter paragraph. And you should state that the purpose of the emphasis of matter paragraph is to communicate that matter which is fundamental for the user in the understanding of the financial statement. So we need to discuss this matter in emphasis of matter paragraph. So this would be our final audit report issue. So we will issue unmodified opinion with emphasis of matter paragraph. This is how we are going to tackle this part. So I'm hopeful that you guys would have understood the format. First of all, you need to understand whether the accounting treatment that management has recorded is correct or not. So if it is not correct, then there is misstatement. So after taking further actions, you need to discuss whether the misstatement is material or pervasive, as we saw in this point. As this was a misstatement, the bridge that they constructed, so this was a misstatement. So company need to, or firm need to discuss it whether it is material or pervasive. So we will calculate the percentages regarding the benchmark. We will confirm that it is whether it is material or pervasive. So once we have gone through this issue, then we will discuss whether auditor was able to obtain sufficient appropriate evidence or not. So according to these two factors on x-axis and y-axis, we will confirm that whether we are going to qualify the report or we are going to adverse give adverse opinion or we are going to issue disclaimer opinion. But in case if we are not able to find any misstatement after discussion of the relevant accounting standard, then we will think whether we have to just issue an unmodified opinion or we have to issue unmodified opinion with emphasis of matter paragraph. So this is one of the most typical types of the audit reports or the question of the audit reports that normally examiner assess. So this is how you are going to tackle this question. So this was Darren. I'm hopeful that you can now attempt part C at home and you will able to write the answer in the format that I provided you earlier. So there is another question regarding audit report. So this is the last question that we are going to discuss today. Uh, Kindly wait for a minute. So dear students, this is another type, another form in which audit report is assessed. So you can see there is a part A, explain the auditor's reporting responsibility that are specific to the initial engagement. So this part is for 5 marks and this is very much straightforward. As we discussed today that you need to memorize different ISAs. So you can see we discussed ISA 510. There it is, ISA 510. So you need to explain the auditor's responsibility, that basically auditor needs to confirm that opening balances doesn't contain any material misstatement and appropriate accounting policies have been consistently applied. So these are the procedures that auditor must apply. In short, you should write these procedures, and if you find a material misstatement in opening balances, then what will your opinion be? What impact it would have on the audit report? Yes, you will qualify the report if there is a misstatement, a material misstatement in opening balances. So this is what you have to required, or you have to portray your knowledge for part A. That is for 5 marks. So if you have a good understanding of ISA 510 and you have memorized 3 to 4 basic points, you can easily gain 4 out of 5. So in requirement B, there is a question of CAM ISA 701. There is a senior's note that is provided, and senior doesn't understand why we need CAM. So what he's saying that several different work opinions on each audit union. That's what he's thinking. The second point is that we have to do a lot more audit work due to ISA 701 CAM, and he's not clear that if we already have emphasis of matter paragraph, why we need to include CAM. So these are the 3 points on which you have to comment, respond to the auditor's senior's query explaining the requirements of ISA 701. So you need to discuss these 3 points according to the knowledge that you have gained according to ISA 701. These are very much straightforward. If you have discussed the factors that are related to ISA 701, and if you have memorized the key points of ISA 701, you can easily answer that question. So why CAM is included in audit report? This is important. So uh, you must state that CAM is basically CAM doesn't need CAM doesn't mean that we are going to modify our opinion. CAM doesn't include any opinion at all. So according to ISA 701, auditor doesn't need to give opinion on different issues under CAM. Actually, auditor opinion relates to only financial statement. He is providing opinion on financial statement only. So what is CAM doing there? CAM is the explanation of the matters, we can say, which are more or which are most significant to the audit. So the first point that the senior raised is that we we will have to give different opinions. No, this is not the case. In CAM, you need to just highlight the significant areas, and the opinion that auditor issues only relates to the financial statements. So the second point that he has discussed, that we have to increase our audit work. Now you need to discuss this as well, that this is not the case that due to CAM the audit work increases. No, this is not the case, because CAM are the matters which auditor already have considered and have obtained evidence for these areas. So these are the risky areas that were highlighted in planning stage, and auditor obtained evidence of regarding these areas. So auditor doesn't need to increase its work. The work is same, the evidences are same, just they have to include the CAM in the audit report, which shows that uh, the evidence that they have acquired and how they manage that audit risk. So why that was a risky area? So CAM is merely the significant matters, and these are selected normally from the ISA 265 communication to those charged with governance, that is normally communicated at the end of the audit. So uh, besides including them in the communication to those charged with governance area, we can include them in our audit report, and we can include them in under the CAM heading. So this point is also invalid. The last point is that why we need to uh, include CAM when we have emphasis of matter paragraph in our audit report. So you have to basically differentiate between emphasis of matter paragraph and CAM. So you should know that CAM is included according to ISA 701, and emphasis of matter paragraph is included according to ISA 706. So you have to differentiate between these two. For example, you can say that CAM are the matters that are most significant ones, or EOM or emphasis of matter paragraph are the fundamentals for the user understanding. These are the matters that are fundamental for the understanding of the user. So ISA 701, requires auditor to choose a matter as a CAM according to their judgment. So there is a case that a matter rises which can be included in CAM as well, and which can be included in emphasis of matter paragraph as well. So this is upon the judgment of the auditor. If he wants to highlight for the fundamental understanding of the user, he can include it in emphasis of matter paragraph. And if he want to include it in significant matters, he can include it in CAM according to ISA 701. So this is the point that you need to discuss here. This is This is somewhat close to knowledge based question, but it needs you to evaluate the seniors notes also. So you need to discuss uh, different logics that are provided by the senior, and then you need to discuss them according to the knowledge that you have gained by reading ISA 701. So this was a straightforward question, but the main point is that we want to come, as we are short of time, the time is running. So we can see there are two issues. A major customer went into administration and it owed 2.5 million balance, and there is a case involving ex-employee has made a case due to unfair dismissal, and the amount of damages is 50,000 pounds. So this is the point basically I wanted to mention, that in this form of audit report question, auditor can give you uh, a content of the audit report. So you can see basis of opinion and disclaimer of opinion and emphasis of matter paragraph is given, and you are required to critically appraise the proposed auditor's report. So you have to critically see the report. So what are the mistakes? So mistakes may be related to the opinion, but there is a chance that there is a misstatement of format, or the wording is not right, or proper explanation is not provided. So we can see the heading basis for opinion and disclaimer of opinion. So first of all, in audit report, the priority is given to opinion. First of all, opinion comes, and then there is the basis for opinion. So in this section, we can see in this report, both are basically written in one line. They should be written in separate lines, and separate paragraphs should be used, but he has included in same line. So it is wrong according to ISA 701. And he's saying that we have performed audit based on the materiality level of 1.5 million. We don't need to discuss the materiality level in our opinion. So this is wrong. Our audit procedures have been conclusively, the word conclusively is wrong, as auditor doesn't give absolute assurance. Auditor always give the reasonable assurance. So you need to discuss different matters, and the wordings and the paragraphs and the format may be wrong. So you need to highlight these problems in the audit report. And you can see that trade receivables are materially misstated. The finance director of Marco, Rita Gilmore. So this is very wrong that you are mentioning a specifically mentioning a name of finance director in your opinion. So he can file or she can file a case on you that you have mentioned her name. So this is unprofessional, and you are saying that she refused to make an adjustment. So therefore our opinion, the financial statements of Marco are materially misstated, and we therefore express a disclaimer of opinion. So first of all, there is no discussion of accounting standard, relevant accounting standard. The issue was of the, we can say, the case, and the issue related to the trade receivable. So there is no discussion of receivable or relevant accounting standard. And what he has done, he has made a wrong opinion. He's saying that he's issuing disclaimer of opinion, whereas we can see materiality level was 1.5 million and the issue of the customer was 2.5 million. So this is material, this is not pervasive. So as it is material, so qualified opinion should have been issued. So the opinion is also wrong. Then we can see emphasis of matter paragraph is written, and the issue of case of 50,000 has been discussed here. And what he's suggesting that in our opinion this amount should be recognized as a provision, but it is not included in the statement of financial position. So this is very important, that only those matters are included in emphasis of matter paragraph which are correctly recorded. If they are not correctly recorded, they should be discussed in opinion paragraph or basis of opinion paragraph. So only those points that are correctly recorded by the management but auditor needs to emphasize on that matter, they are included in this paragraph. So as 50,000 is immaterial, we can see materiality level is 1.5 million. So this is an immaterial point. So if they want to, they need to discuss this point, as this is immaterial. So we can list it in the uncorrected misstatements as well. So this is important. The opinion is also wrong. The paragraph that is used is also wrong. We know that the use of emphasis of matter paragraph here is somewhat inappropriate, and we have discussed that in emphasis of matter paragraph, only the transactions that are correctly recorded are referred to this matter. So uh, but here in this question we can see that emphasis of matter paragraph is referring towards the provision that is not included into the financial statement. So actually it is a misstatement. If it is a misstatement, it should be recorded in the opinion paragraph. It should not be recorded in emphasis of matter paragraph. But the important thing is that the 50,000 is not material. This is a misstatement, but this is an immaterial misstatement. So the report is the opinion is correct to not modify the opinion, but they have actually taken wrong course of action, and they don't need to basically identify this in emphasis of matter paragraph. They can only keep it in uncorrected misstatements as it is immaterial. If it aggregately becomes material, then we can discuss it in opinion paragraph. We don't need to discuss it in emphasis of matter paragraph. So although it is immaterial on its own, so it is very important to understand that it may become material along with other uncorrected misstatements. So we need to see these things also. So this is how you are going to critically appraise the audit report. And uh, critically means you have to judge the wordings, you have to see the paragraph, you want to see the format, you need to see whether the priority is properly given to the headings, the heading is right or not, the words that are used are correct or not. So these are all the factors that are discussed when you need to critically appraise the audit report. You don't need to basically redraft the audit report, you just need to discuss the contents of the audit report. So that's all folks for today. So we need to discuss some questions. So please ask the questions. We have last half hour for the discussion. There's a question from Fahad Aslam that if management didn't remove it as contingent liability, can we qualify? Or sir, it will be a misstatement. No, it was a contingent liability and they correctly stated and recorded that it is a contingent liability. So we don't need to modify the report. We can, yes, include that matter in emphasis of matter paragraph. Sir, in revenue misstatement question, should we be only considering profit benchmark as it related to revenue? Yes, we can use profit and revenue as well, but the data that was provided by the examiner related to only assets and profits, so we used only asset and profit. And the next question is Ahmed Junaid, can ACC examiner ask to redraft the CAM or the audit report? If yes, that means we'll have to ratify the contents of the report. No, Ahmed, auditor will not ask you to redraft or write the audit report. This will not be the case. The ultimate possibility is that he can give you an audit report and he can ask you to critically evaluate it. This is the case with question MAR MARR. So you should practice these questions at home. There are many questions that ask you to evaluate or critically evaluate the audit report, and there are many questions that suggest you to uh, review the impact on audit report. So there are 12 to 14 questions in exam kit and in also past papers. So you can go through these questions. You can see these two types over there. Saida Naqvi is asking what is the cost approach in FRS 15? Cost to cost approach, according to cost approach, the actual cost that has been incurred uh, till this year, is divided by the total cost, total estimated cost over total project. So for example, if a total project is of 10 million and we have incurred 2 million cost, so we will divide 2 by 10. This means 20%. So we will recognize 20% of the revenue. This is purely the matching concept. And Edmund is asking, when can we have the notes during the live presentation? Notes are here. They are included in the handouts. So you can download from the handouts. Can we add emphasis of matter paragraph in Darren part 1? No, the report was modified there, so you cannot raise this issue in emphasis of matter paragraph because there was a misstatement there, Junaid. So you don't need to basically highlight it in emphasis of matter paragraph. You have already discussed it in opinion paragraph. When other matter paragraph is included in the audit report, does it consider is as the qualified report like we do in the case of the TOSIC? When other matter paragraph is included in the audit report, does it consider as the qualified report like we do in the case of EM? No. Yes, other matter paragraph and emphasis of matter paragraph and other information paragraph and material uncertainty paragraphs, if auditor includes one of these paragraph, the audit report is going to modify, but opinion will be unmodified. Means financial statement gives true and fair view, but there is a matter that auditor needs to discuss with the shareholders and he has included it in its audit report. So management will be happy with that because the opinion is unmodified and auditor is asking that stating that financial statement gives true and fair view. Yes, they have emphasized on some things, so it doesn't matter or bother to the management at all. Okay, Zad is asking to share the list of questions for each topic to practice. So I think if you can practice even these 4 questions today at home, it will be enough, as we have discussed these 4 questions comprehensively. So if you somehow manage to follow the format that we discussed for each question and you practice that question at home, so it will be very easy to answer or to attempt similar questions. So there are many questions similar to them. I can share some list and I will, inshallah. For immaterial, we will take to uncorrected misstatements. Yes, these are the uncorrected misstatements which are immaterial, and we will see whether these uncorrected immaterial misstatements, if aggregated, if they become material, then we will take further action on our audit opinion. Otherwise, we will not include it in opinion, or we will not include it in emphasis of matter paragraph. So you need to consider that we qualify our opinion on the basis of materiality. So as it is immaterial, we don't need to discuss that matter in opinion. And with regard to emphasis of matter paragraph, we only discuss only these things that are fundamental for the understanding of users. So an immaterial thing cannot be the fundamental for the understanding of the user, so we can skip them. So admin is saying that I mean the writing of the presenter as he presents each day. So you can take a picture, the format that I am providing to you. So you can take picture from your screen, or you can have a screenshot as well. So for example, so this is the examination approach that is already included in the slides. Kandinsky approach, this was the format. You can take the picture. You can take the screenshot even, and this is Darren. This is the format that you should follow for Darren. Accounting treatment, any further actions and impact on audit report. The important thing is that you have to subdivide the requirement. You have to identify the sub requirements in a big requirement. So this is important. This is part B of the Darren. Same format was applied twice. So this is how you are going to, and the rest of things that we discussed in MAR or the fraud question, that was Spaniel. We discussed that verbally. So you can have recording of that. So this is okay. So let's move to further questions. Saad Gohar is asking that I failed in March at 48 and I gone for administrative review. Question 1 and question 3 were passed, but the report question failed, so I think we have to pass all the questions. Cumulatively, basically, you have to raise your marks from 50. So if you are pass in question number 1 and if you are pass in question number 3, so uh, pass means getting 50% marks in question number 1. So question number 1 has 50 marks. So if you get 25 marks out of that, so this means that let's make an assessment of this. We can go to here. So this is question 1, question 2, question 3. You know, question 1 has total 50 marks, question 2 has 25 marks, question 3 have 25 marks. So if you get 50% out of 50 means you get 25. If you get uh, for 25 you get, for example, 13. So if we add here, okay, so we can see that it's gone. Okay, so if you are failed in this question and if you receive 10 marks, so this means that you are actually not pass because you have gained. So for example, we apply formula sum this plus this plus this plus this with that. So you are failed at 48. So this means you are failing question number 3. But if you get 30 marks in question number 1 and you get 18 marks in question number 2 and you get 10 marks in question number 3, so if we apply same formula, so you will get 58 marks. So Saad, yes, you were passed in question number 1, you were passed in question number 2, or sorry, question number 3, and you failed in question number 2. Okay, now this is not important that you should pass all the questions. If total becomes more than, means if you have gained more marks than 50%, For example, you have gained 30 marks, 35 marks from question number 1 only, and you are pass in question number 2. If you are fail in question number 3, still you can pass 50 years. So this is not important that you have to pass in all 3 questions. I am hopeful that you would have clear now. Rahim is asking, is there a chance of critical appraiser once again coming in September 2020? Yes, you never know. It can come again, or even examiner can skip the audit report question. There is a chance that this time the paper will be easy, and there is a chance that, uh, of course, this is a probability and possibility. We cannot confirm anything because this is not a local board of any intermediary or matriculation. Uh, but this time, I would suggest code of ethics are very important. Quality control is very important. There is a fair chance that question might be of question 2 or question 3 can come from that area. Audit risk is important. Business risk is also important. So kindly consider these things as well. And review engagement is also very important. So always it is a mixture of some questions. Matter to be considered is also important. So difference between impact on audit report and impact on audit opinion. Yes, there is a difference. If auditor is asking, Pratibha, if examiner is asking you to basically discuss the impact on audit report or impact on audit opinion. In audit opinion basically means that you have to discuss the whether it will be an unmodified opinion or it will be a modified opinion. So, and if the examiner is asking that you should state the impact on audit report, so you can discuss other headings as well, like other information paragraph can be included. So these are important. Or if he's asking you to give state the impact of audit report, so you have to state that this will be an qualified opinion, and under the head of qualified opinion you will need to write the basis for qualified opinion under the heading which we will discuss why we qualified the audit report. So there is a slightly change. There is no major difference in both areas. In both requirements you need to discuss the impact on audit report. So Saida Nakvi is asking that I am asking since day one about what is practice management, sir. So Saida Nakvi, uh, practice management are the issues that are related to firm from the point of view of the business. You know, firm is also deemed for the profit. Firm is there for profit seeking. They are not for profit organization. They are profit seeking organization. So the proposal that is provided in the exam, you should confirm that practically it is suitable, feasible or not. So as a business point of view, would firm go for that option or not? So this is not a matter of ethical issue. This is a matter of practically happening or not. So practically a firm can make an electronic equipment or not. So this is a matter of SWOT analysis, sort of uh, a summarized SWOT analysis in which opportunities, threats, or strengths, weaknesses can be discussed, or any other matter that firm is not practical to enter in a specific industry. You need to discuss these things. Saida Nakvi is asking, if is there any matter if I don't use spreadsheet at all? No, it is not the matter. If you want to calculate the ratios on your calculator and you want to write in the word format, you know, if we show the ratios, the calculation of the ratios, we can gain more marks. We saw in Parker the question that we attempted yesterday, the marking scheme we discussed, we saw that 6 marks were allotted for showing the calculation of the ratios. So you need to gain these marks. So for this, yes, you can write these in word sheets also, but it is suggested that you use Excel, but it doesn't matter if you calculate them manually through calculator, and you write the formula in a worksheet and you calculate the percentage over there, but you should show the calculation. So Dipto is asking that if auditor does not know whether accounts are showing true and fair view, can that come under CAM? No, CAM includes only significant matters, significant risky matters. It includes unusual transactions, it includes complex transaction, it includes subjective issues. So all these are mentioned, or all these are regarded as a high risky areas at planning stage. So auditor need to consider the CAM for the discussion of only risky areas. So if the financial statements are not showing true and fair view, you need to discuss this in opinion section. So to understand this, you should review the book and you should read ISS 700, that is unmodified opinion, and the contents of the audit report will be there. You can read them. What is the marking scheme for report opinion? Oh yes, this is an important question by Junaid. What is the marking scheme for report opinion? Yes. So if we go back there, and this is a slide. So this is an important question. I missed that. So you can see this is accounting treatment, further action, impact on audit report. So if there are 7 marks, 3 marks are allotted for accounting treatment, 2 marks are allotted for any further action, okay, and 2 marks are allotted for the impact on audit report. So what student normally does is that he just gives 2 or 3 lines explanation on accounting treatment, and then he jumps to the impact on audit report, and straight away he says that the report needs to be qualified. So he miss out all the information or the easy points. So he needs to uh, basically discuss line by line, and he need to give proper time. He need to give a full explanation of the accounting treatment in a healthy paragraph. So he need to write for this thing for the 3 marks. So for further actions you will be awarded 2 marks, and there are only 3 marks for audit report, but sorry, 2 marks for the audit report. And if you straight away discuss that we will qualify the report, you can get only half mark. If you discuss the materiality level and then you judge and you discuss that it is not pervasive according to ISS 701, it is material, and auditor is able to obtain sufficient appropriate evidence. So if you have discussed these things and then you come to the point that we're going to qualify the report, then you will get complete 2 marks. So this is the marking scheme. There is no WhatsApp group for this. Can you explain other matter and other information paragraph? Yes, this is another important question by Saida Naqvi. What is the difference between other matter paragraph and other information paragraph? Yes, other matter paragraph includes only those things that are relevant to the understanding of audit report. That what is the context of audit report, uh, is there any limiting factor, or is there any limit on the use of the audit report, or the scope of the audit that auditor wants to explain. So this is only for the sake of the understanding of the audit report. Whereas other information, what is other information? According to ISS 720, yes, you guys need to revise this standard also. There may be a chance that this time examiner may examine this standard ISS 720 other information. What is other information? Integrated reporting, all the reports that are included into the annual report before the financial statements. It can include chairman report, director report, corporate social responsibility report, committees report, and corporate governance report as well. All these reports are considered as other information. And there is a question, the Darren part C. Darren relates to ISS 720. You should attempt this question at home, and you should attempt part C as well. So it has an issue of ISS 720. We didn't had left much time to discuss that. So in other information we need to read the other information, we need to find out material inconsistency and misstatement of fact, and if there is a misstatement of fact or material inconsistency, we will report it in other information paragraph. So Tosik is asking a question, does there is any type of question where we need to reassess the materiality as we do practically in the audit? uh, there is a chance that auditor asks you to reassess the materiality level. Yes, rarely it can happen. And there is a question in past papers before 2010. Once examiner assessed this thing, and he asked you to reassess the materiality, and there were different materiality benchmarks. So, but it is very rarely that it can happen. So we are done with the time here. So that's all for today. I hope that session would be very useful for you guys to understand the ISAs, how the ISAs memorization is very important for you guys, and how you are going to tackle the questions, and how you are going to refer ISAs, and the audit report, that is very important. So see you tomorrow. Thank you. Allah Hafiz.